Hi guys, welcome back to Toto Capital. My name's Liam, and in this video, I'm going to show you exactly how to use liquidity in order to ensure that you are trading on the right side of the markets. Okay, I'm going to tie it all together and ensure that you've got a framework that you can personally use to execute within the financial markets. So let's just jump straight in here. This is Euro USD, Euro dollar, and this pair is predominantly traded around liquidity. Okay, it's all based around liquidity, and it responds very well to the frameworks that I'm about to show you guys. Okay, so let's just jump straight in. This is on the daily time frame. This is how we're going to get our higher time frame perspective. Then we're going to drop down to the lower time frame. In this example, the lower time frame will be the 4 hour, and there we'll use the 4 hour in order to look for an entry within the market. Okay, so this is the daily time frame right here. What I want you guys to first off do, head over to the indicators at the top here, type in fractals. It's this one by Rachel_T, and this gives you a a very mechanical way of identifying liquidity within the markets. Okay, so that's that. Apply that to your chart there. Now what you want to do is identify the most recent fractal low on the market. So this is on the daily time frame. This is the daily swing low that we've got here. And you can see we had a reaction of this level pushing price to the upside. Okay, so this is our most recent sort of liquidity resting below here. So all of the liquidity is resting below this low on the daily time frame. In terms of fractal highs, we've got this most recent high over here, so we can mark that on. So these are the two areas of liquidity within the market where a lot of volume will come into the markets, and these are the areas where manipulation is going to take place. Okay, now that we've identified our points of liquidity, let's drop down to the 4 hour time frame and take a look at our framework and entry schematic based on the lower time frame. So we've identified our higher time frame structures and our higher time frame areas of liquidity. So basically the orders, institutions are going to look to manipulate, either above this area here, trap retail going long, manipulate, retest, and then we can look to short that back to the downside. Or alternatively, what they will do is they'll run these stops to the downside, manipulate, run all of this liquidity below here. Once they've done that, they'll shift it back above, and you'll look for an entry schematic around here, and then you can look to target mid-range and back up to range highs. Okay, so price needs to use liquidity in order to move the market. So basically, people need to be losing in order for the institutions to move the markets, i.e., so they need sellers if we're going to be looking to buy. So, for example, in order to get sellers in this market, you want to see price manipulate down below here. Retail will see this as a breakout. And once we do shift back in this area, we can look for a long trade. So all of the sell orders will be matched with the buying orders from the institutions. That'll provide the liquidity in order to actually move the markets. Okay, so let's play price on here. And what you can see is we have ran this liquidity to the downside. So right now, the retail perspective, they'll see this as a breakout. Let's zoom in here. So they'll see this as a breakout since the 4 hour has closed below this key fractal here. However, what we've done is we've sort of immediately came back above and closed back above this fractal low here. So we've deviated below. We've reclaimed, i.e. we've closed back above this area here. Therefore, we can classify this as a deviation and a reclaim. Order goes in there. You've got a clear invalidation below the low here. Okay, so we're going to look for a retest there. Clear invalidation below the low. Because if price comes back below and makes another lower low, therefore it's very likely that this is just going to continue trending to the downside. So we know exactly when we're wrong, and we're wrong if we break back below this low here. Okay, in terms of targets, what we've got here is a sort of double top area. Okay, so therefore this is going to be the first target that institutions are going to be targeting. They're going to be running this initial liquidity here. Okay, so I don't know if this is going to push any higher. However, I do know we've got a very safe target at around a 1 to 2 risk to reward. Okay, you may get a little bit of continuation above that. However, we don't know how price is going to react once we get up to them highs. Okay, so this is a very, very high probability setup. We've got the deviation, we've got the reclaim. Now we're looking for the retest, and we can look to play that back to the upside. Okay, we're essentially doing the opposite of what retail would be doing, which is they would be selling this breakout on this close below. They'd be selling this retest to try target lower prices. However, we're trading what we see, which is this is a deviation. We've reclaimed here. Therefore, this should actually push back to the upside because the range that we're trading in is this range here. Okay, this is range high and range low. Therefore, institutions should look to target range highs. Okay, so let's play price on. You can see we're triggered in this trade to the absolute decimal. Price doesn't actually come down and violate below the range lows, which is a very, very good sign that we're going to look to push to the upside. We've got our invalidation below here, and you can see within 8 hours or so, this trade's already smashed. You take profit. Okay, and we've ultimately ran this liquidity to the upside. So in terms of what happens now, I have no idea. But if we've essentially ran that liquidity reclaim back below, so you'd expect actually lower prices, and you can see that's exactly what you get. So it's very important to take profit around these key areas here, the points of liquidity. And yeah, that's really what I wanted to touch on in this video. Okay, so using your higher time frame, which is your daily, to identify your key swing levels. Then you're looking for deviations of liquidity, reclaims, retests. You can look to enter. Stop loss, you've got clear invalidation below the low. Targets, you've got point of liquidity. You can see you've got this sort of double top area. So that'll be the first target that you're going to be looking at taking, most of your position off the table. If you do run that, you've got range highs up at 1.1 key psychological level. So, it's still very important to take profits at logical areas. Okay, so that's it for this one, and this is how you use the higher time frame, which is the daily, Confluence to your 4 hour with points of liquidity. Okay, so yeah, I hope you guys like this video. Please like, comment, and subscribe, and I will see you guys in the next video. Okay, take care, guys. Bye-bye.